Hey guys, welcome back to another edition of the the red folder strategy that I've been talking about for the last couple of weeks. And as promised, I wanted to tell you guys today. I've said in my video on Sunday that we're going to be in front of our charts on Tuesday, Wednesday, and Thursday. Today was retail sales. Tomorrow is FOMC, and then there's another red folder day thereafter. But obviously, the big one is tomorrow. But just want to show you guys why today was such a good trade again, and why you should backtest this, journal this, and actually follow this, and see for yourself how profitable the strategy actually is. All right, so what we're going to do here, so you'll see this candle here, that's the 8:30 candle. It spiked up, it came down, make a little wick there. Doesn't matter, there's wicks on both sides. That wick does not have to take any lows out. But anyways, so we've marked out the top end and we marked out the bottom end. Then market is consolidating. Remember, the strategy now is we've marked out the highs and the low of that news candle. Now we're waiting for liquidity, to be run on both sides. So let me just targets, just write it out so we're all on the same page. Okay, so that was the one target, that was the other target, that's the top target, and then you get the bottom target. All right, so we sat through all of this. This is the 1 minute chart. I'm only looking at the 1 minute chart. Then what we do is we wait for your entry, and this was my entry. I trade IFVGs, inverted fair value gaps, and in this case the market ran up, did not go, it did spike right there, so you could have used that low there, but then the market consolidate and then aggressively push higher and then reject through that fair value gap, and your entry would have been there. You would have put your stop at the top side of that fair value gap, and then you would have targeted the actual low, and you'll see the risk reward is 2-to-1. That's a nice risk reward. And the big thing here is it just took 2 candles, 2 minutes to hit your target, then you're done for the day. You don't have to sit around and wait for anything else to play out. So what I can show you here is, if you really wanted to hold on to a bigger target, the strategy is the highs and the lows. That's it. 2 minutes, you're out, you're done. But if you trade the other strategy, which is your the opening gap, and you'll see, and I'll make another video to explain this. This was an opening gap, and normally, there's a big high probability for price to always retrace back to the 50%. And in this case, my target was at the 50%, and the 50% was right here. And let me just put it there, and as you can see, target 50%, 50% opening gap, and this came in, it hit your first target. You could have walked away from it and waited for another entry. This fair value gap obviously was important to show that price was spiking in it, and I'll share another screenshot after this where I had my 50% order there, and I've entered here. So obviously I didn't get the order full, but I got my profit target hit. I then left a big target down here, and because that's my other strategy, to target the 50%, and it sure enough came up here and tapped me in on my other trade. It didn't close above the IFVG. Otherwise, if it had or did, I would have just closed both positions and I moved on. But in this case, gave me a nice rejection off. You could have entered there again to ride it all the way down to that 50%. And if you've done that, and I'm not about to just say if you did that, if you've done that, that would have been another 2-to-1. So regardless if you took this first trade or waited for this, it's 2 trades basically. And if you really think about it, if you're a Fibonacci trader, you take the swing high here, and you target a swing low there, this is in that premium zone above equilibrium, giving you another entry. So there's various different entry models that you could have used here: IFEGs, OTEs, and rejection offer, fair value gap, which is this one here. 3 different entries would have given you a nice profit of 2 to 1, and that gives us now 4 red Fulden news days in a row where we were profitable. And guys, if you don't know the strategy, go have a look at my my video, which I will link in the description below. Just go through it so you can understand what it is. If something's not clear, feel free to drop me a comment, and I'll happily obviously respond to you and help you, guide you through the process here, so you on par of this, and so you can capitalize of it, and obviously for your journeying purposes and not as financial advice, to get to learn the market and to see the market is not as intimidating as everybody think. If you know what to look for, like a strategy like this, it's simple. There's no indicators on here. All you got to do is see what price. You just have to sit back and wait. Wait for price to give you an opportunity. And if it doesn't, then so be it. If you had missed this first entry and you're like, it already took me out there, this was another target you could have entered. And that's basically it, what I've got for you guys today. I'll obviously going to be around for FOMC tomorrow, and looking forward to see what opportunities it's going to provide us with tomorrow. But have a great week, guys and girls, and any questions, feel free to reach out to me, and it'd be great if you can like and subscribe to my channel and see if we can grow this thing as quickly as possible, so we can then the minute I get to 1,000 subscribers, I will do live sessions on these days, so you can see how it plays out, in a live environment, and not like this after the fact. But saying that, it's not cherry pick. I mean, I said to you guys on Sunday, we're going to take a trade on Tuesday, and then I'm going to look for one on Wednesday and on Thursday. So let's see how it plays out, and be safe out there, and don't try to trade now, because FOMC tomorrow, it's probably going to shake people out. So looking forward to tomorrow, and we'll chat again. Thank you. Bye bye.